referring to all, where we are going to see income from salary in income tax. So in income tax, it is income received from the public to the government. So the government receives the income through tax. The tax is divided into two categories. One is direct tax, another one is income tax, another one is indirect tax. The direct tax includes income tax. So the government receives income through direct taxes. So in this case, the incomes are divided into five categories. One is income from salary, then second one is income from house property, and third one is income from business or profession. Fourth one is capital gain income, and last one is income from other sources. Apart from the four, the remaining incomes are included in income from other sources. Now let us see income from salary. So salary means we receive the income from the employer for rendering the service of the particular organization. So we see any remuneration paid by an employer to his employee in consideration of his service is called as salary. So the important points about salary. So, what are the remunerations included in salaries? There is every kind of remuneration, whether the person is highly or lowly placed. Then, salary and pensions also received as a salary income. Salary of a member of parliament is not taxable and eligible. That is, the salary of a member of parliament is not taxable and eligible. Salary received by the partner is not chargeable tax. Family pension received by the employees also not chargeable to tax. So what is salary? Salary includes wages, annuity, gratuity. Already, annuity means we receive the income monthly wise or installment basis. Gratuity means the employee we receive the income or receive the amount after retirement or at the time of retirement. Any fees or commission from turnover purposes means the benefits attached by the employment. Leave salary is also called as a salary. The employer contribution in excess of 12% of PF. That is a PF are classified into four categories. One is statutory PF, another one is recognized PF, another one is unrecognized, last one is public PF. It is recognized PF means it is only for government employees. Unrecognized PF means it is not comes under this category. Recognized PFS is for all private employees. So, in case of private employee, the PF is contributed by both employee as well as employer. The employee may contribute more than 12%. It is included in the savings of income under reduction under section 80C. But in case of employer, they may be provide 12% of salary of the employee. Suppose they will provide more than 12% means the excess of 12% is chargeable tax in the hands of employee. Okay. Then the aggregate of all sums of transfer balance and the contribution of central government. These are the items including salaries. So now let us see the different forms of salary. So leave salary is also including salary. Compensation for attachment of employees taxable. Compensation for attachment. Suppose the employer returns the employee, they give compensation to the employee. Then fees and commissions also called as a salary. Bonus received by the employee is also taxable. Gratuity is also taxable. Pension is called as a salary. The annuity received by the employee is also taxable. And now let us see the allowances. Allowances means the amount or the salary, remuneration attached to the salary. So allowances are three types. One is taxable allowance, other one is partly taxable allowance. That is allowance exempted up to specified limit. The third one is fully exempted allowance. So allowances means payments in cash made by the employer to his employee. So now let us see the taxable allowance. So in case majority allowances are taxable, that is DNS allowance, medical allowance, tiffin allowance, servant allowance, key area allowance, warden allowance, reputation allowance, etc. These are the allowances are fully taxable in all types of employee. When allowances exempt up to specified limit, that is that allowances are called as partly taxable and partly exempted tax. That is the number one allowances are called as HRA. What is HRA? House rent allowances. So every employee may receive the HRA. Sometimes the employee having own house means the HRA is fully taxable. The employee receiving the HRA at the same time having the rental house means the part of the amount is taxable and the remaining amount is exempted. So what are the amount is exempted? It is they have three provisions: actual HRA received, then excess when paid over 10% of salary, then 40% of salary or 50% of salary. If the assessee is situated in non-metropolitan means they have 40% of salary and other metropolitan means 50% of salary. So out of three provision, the least amount is exempt from tax. So now we calculate the least amount. After that, the actual HRA received minus the least amount, the remaining excess amount is called as taxable HRA. Then next partly taxable allowance is entertainment allowance. So the entertainment allowances are categorized for two types of employees. One is government employee, another one is non-government employee. So non-government means other employees, private employees. So in case of private employee, all entertainment allowances are taxable. But in case of government employee, they have some exemption. That is, they have three provisions: actual entertainment allowance received, absolute amount of 5,000, 20% of basic salary. Out of three, the least amount is exempt. Maximum the 5,000 is exempt from government employees. So if suppose the government employee receive for entertainment allowance for rupees 50,000 a year means they have exempted up to rupees 5,000. The remaining 45,000 is taxable EA. Now we see the special allowance exempt under section 10. These are the allowances used by the employee up to the limit is exempted. What are the allowances? Traveling allowances. So traveling allowance is granted by the employer to the employee. So the actual amount spent by the employee during the working hours, the actual amount is exempted. The remaining is taxable. Suppose a particular employee receive traveling allowance for rupees 50,000 in a month. They may be spent for only 40,000 means the remaining 10,000 is taxable. Or in case the employee receive 50,000, they may be used for official purposes for rupees 55,000 means the amount granted or actual amount used, whichever is less is exempted. So automatically total fully exempted from tax. Then daily allowance is exempted up to their utilizations. Then conveyance allowance is exempted up to utilization. Helper allowance, academic allowance, uniform allowance. So majority concerns gives the uniform allowance to their employees. So actual amount spent by the employees exempt from tax. Then special allowance under certain categories. Special compensatory allowance on the basis of areas, that is hill area, scheduled area, etc. Then education allowance. So education allowance is exempted up to 2 child, 100 per month for 2 children. Okay. Then second hostel allowance is exempted up to 300 per month, maximum of 2 children. So the transport allowance is exempted up to 800 per month. It is fully exempted allowances. What are already we see two allowances: fully taxable allowance, then partly taxable, partly exempted, and third one is fully exempted. These allowances are fully exempted. That is foreign allowance, then sumptuary allowance, allowances from UNO, per day allowance. Foreign allowance, the allowances paid by the government to the Indian citizens outside India. That is fully exempted. Sumptuary allowances, the allowances given for High Court or Supreme Court judges only. And allowances for UNO, allowances given by UNO to its employees fully exempt from tax. Per day allowance, this allowance given to the use of hotel, boarding and lodging is also exempt from tax. Now let us see the salary elaborately. What are the items including salary? It is basic salary, allowances, perquisites. Perquisites means the benefits attached by the employer to the employee. Then profits in lieu of salary. So these are the items including in salaries. How we can calculate gross salaries? Total salary less entertainment allowance, employability tax, and also standard deduction. So three items will be deducted. Remaining is taxable salary or income from salary. Now let us see the perquisites. Perquisites is the benefit attached to an office by the employer to the employee. It's called as perquisites. Perquisites are classified into same category. Already we see the allowances. Allowances are three types: taxable elements, partly taxable elements, and fully exempt elements. The same things is available also perquisites. Perquisites is taxable to all employees. Perquisites taxable to only specified employees. Then tax-free perquisites. Taxable perquisites. These are the items are taxable to all types of employees. Free accommodations, hotel bills, loan amount, education expenses, domestic servant salary, electric bill paid by the employer, gift received by the employee, club expenses, any other benefits. So these are the items. These are the perquisites taxable to all employees. Perquisites taxable in case of specific employee. Who is called as a specific employee? Directors, employees having substantial interest in the employer, any other employer whose income exceeds rupees 50,000, facility of car, sweeper, gas, electricity, water and energy, education facilities and transport facilities, etc. These are the perquisites or tax-free perquisites. Medical benefits, tea or snacks provided by the employee, telephone expenses, employee contribution to staff insurance scheme, leave travel concession. So these are the perquisites are totally exempt from tax. So in case of rent-free accommodation, how we calculate value of perquisites? So the value of perquisites is divided into two categories. One side is government employee, the other side is non-government employee. For government employee, it is very simple. We have to only take a license fee determined by the government. So if suppose the government provide the house to the government employee means the license fee is also fixed by the government. So we have taken the license fee fixed by the government. Plus, suppose the employee, that is government provide the furniture to the employee means, so the total for 10% of total furniture cost will be added. So simply we calculate license fee determined by the government and also 10% of cost of the furniture. So that is called as total value of perquisites. Out of this, if suppose the government may reimburse from the employee for some amount, that will be deducted. After deducted, the remaining balance is called as taxable perquisites because of government employees. So other employees means private employees. So other employees are categorized by two ways. One is the employer provide the house is owned by the employer, and also the employer provide the house, but the house is leased by the employer. The first case is the employer provide a house to the employee, the house is owned by the employer. In case, we have to see the three categories. That is, we have to see the populations of the particular town or particular city or particular area. So, in case the population is less than 10 lakhs means 7.5% of salary of the employee is taxable. In case the population is 10 lakhs to 25 lakhs, that is more than 10 lakhs but less than 25 lakhs means 10% of salary of the employee is taxable. In case of the population more than 25 lakhs means 15% of salary is taxable. So that is, if the employer provides house to the employee, the house is owned by the employer. So how we calculate value of perquisites? 7.5%, 10% or 15%. Out of 3%, we have taken as any one. So it depends upon the population we have to take in. The same case, the employer provide furniture means the total out of total furniture cost, the 10% of furniture cost will be added. Then the total will be, we are getting total, then less amount reimbursed from the employee. The remaining is value of accommodation and taxable accommodation in the hands of employee. The second case, the accommodation hired or leased by the employer. The employer provides house to the employee. At the same case, the employer leases in the particular house. So, in this case, 15% of salary of the employee is taxable. The same case, 15% of salary is taxable. In addition, suppose employer provide furniture cost means 10% of furniture cost will be added. Then we get the total, then less amount reimbursed from the employee. The remaining is called as value of perquisites or value of taxable perquisites in the hands of employee. The second important perquisites is valuation of motor car. Motor car means there is a car is called as motor car. the car is owned by the employer. In case you have to see any informations, car is owned by the employer. So if suppose the car is owned by the employer and it also given to the employee means the car is used only for official purposes by the employees, fully exempt from tax. Now car is used for car is owned or hired by the employer and running charges by the employer means if the employer gives small car means 1,800 per month is taxable, large car means 2,400 per month is taxable. Car is owned by the employer and running charges made by the employee means the small car means 600 per month is taxable, large car means 900 per month is taxable. If suppose they provide driver means the chauffeur is also called as driver. Suppose they provide driver means 900 per month is also taxable. So now let us see the fringe benefits. So fringe benefits is out of purposes, allowances, some benefits given by the employee in the are attached by the employer to the employee in working place. That is called as fringe benefits. Or let us see the provident fund. Provident fund means it's a saving. Sorry.